Good afternoon, traders. This is Christian from Tribeca Trade Group, and today is Tuesday, February 23rd. Yeah, no doubt, interesting day that we had on our hands today. Probably speaking very, very generally here, but I think we had a little bit of a very heavy push to the downside around the open, and then of course we had a nice rebound. That did entice some buyers to kind of come in and take positions, myself included. Once I saw a lot of stocks that, I'm kind of interested in down, over 5% to down 10%, that definitely kind of, entices me to get involved in some positions. And that's basically what I did today. So first things first, where's my risk disclaimer? Risk disclaimer, everything that we're going through here is for information purposes only, not giving out any advice, recommendations, anything of that sort. And so let's talk about, first of all, the S&P, and then we'll talk about some of the other things that transpired through the day, and of course how I traded it and what I did, and where we saw some option activity, where we saw some buyers come out. So I'm waiting for this. Here it is. So there was, if you watched yesterday's video, I talked about 3 different levels in the S&P to kind of watch out for. Number one, this is actually a lot higher, but I mentioned this 3855, right? I'm on the 5-minute time frame as a downside VPOC that needed to most likely be taken out. So that was taken out in the morning, 455. The next level that I talked about was that we had support here at 3835. Again, we were all the way up here yesterday, right? So 3834, I rounded up, 3835, right? That was the second level, right? What was the third level that I talked about? Right, that was on the 1-hour time frame, and I talked about, hey, if we break that level, we have this 1-hour VPOC to the downside, right? And that was basically all that I mentioned in terms of S&P levels to watch. But if you go through in yesterday's video, I talked about those 3 levels. All 3 of those levels were taken out. The last one being, right at that big swoosh down in the morning at 9 o'clock, where this 1-hour VPOC was taken out, or in the 9:30 hour. All right, so that was pretty good, and how I use these version point of controls, as always, is, number one, if I see one right in front of me, right, it is a high volume area that hasn't been revisited. So they often act as magnets, especially when you're getting closer and closer to them. The market likes to revisit areas of high volume that have not been revisited before. So you could turn on the volume profile, which I have turned off, but if you want to see that, all right, so, but they come into play over and over again. Why? Because the market remembers, right? It remembers that there was a very high volume node back here. So if you go back to this volume profile, right, you could see the shaded area in here, right? This level was the highest volume, and notice a couple weeks back we did not even go through this value area here. So they become very big. They are very big pivot points, right? Some people like to look at gaps, right, and whether a gap is filled. It's a little bit of the same methodology there, but once this is taken out, do I go ahead and buy on that level? I don't personally. I know some other traders do that, but for me, I kind of wait and see if we can kind of maintain that level, right? Because there was one in the Qs that did not get taken out, which was damn near close, right? Which is down here. Now, I don't know if we're leaving that for a later time, but we did bounce away from it, and it has not been removed. So we'll see. If the further that we get away from it, the better, right? So I would say that in the Qs, and the Qs had a really nice bounce, right? We almost finished positive for the day, right? So let's look at this as well on the. So this looks a little bit less constructive to me. I'll show you why, right? S&P managed to hang above. Got back above the 20-day moving average and above value for February. So the uptrend by definition is intact. We got close to touching the 50-day moving average intraday, but we closed back above the 20, and again back above value. So that looks pretty good to me for the Qs. Sorry, for the S&P. It's been a long day. For the Qs, we did not retake. We did get back above the 50-day moving average, but we did not retake the value area. Now we're only going to have the Fed value area for a couple more days for the rest of the week, but I would kind of be more of a watcher here, with this 323 level that needs to be retaken, right? If we move over to IWM, right, because I like to go over all three, again, healthier, right? So, I think that this wasn't just a one-day phenomenon, right? There is some rotation going on, right? Bond yields are going higher. The bonds were higher again. Bond yields went higher again today. So I think you kind of have to pay attention to some of these levels. I think that some traders, right, they just want things to go back to normal, meaning less volatility, being able to kind of do the same day in and out. As I've said, and I say in a lot of these videos, you have to continue to make adjustments, right? You have to trade what the market is giving you, not what you want it to be, right? I had a question earlier today, which was a good question. A lot of great questions today. One of which was like, hey, is the volatility over? Around like 10 or 11 o'clock this morning. And I'm like, I have no idea. I'm just trading the market in front of me. Every time I obviously look at the market in terms of a risk to reward framework, probabilities. Today looked like a good place to kind of put some money to work, and some of which I took off right away, right? I got rewarded for it, and I took off because none of us have a crystal ball. We don't know whether or not, how this market is going to be, every second of the day. I basically am just trading levels, and I will begin to add more risk when I think it's a better buying opportunity, right? That's just trading 101. It's not trying to predict what you're going to see on a day-to-day basis. It's using your system in a risk to reward framework and looking at probabilities in your mind of what you think is going to happen. And then having levels where that you're going to defining your stop prices, your target prices on the onset of the trade, so that when your idea may be wrong, right? That's the whole thing. Too many people, I think, and newer traders do this a lot too. And I was a newer trader once too, and I had to get over all of this. But newer traders and some of the traders on Twitter, people flock to traders who have conviction, right, and have confidence. Nothing wrong with having confidence and conviction, but sometimes I think younger traders seek these people out because they think that they know. They don't know, right? They're basically just trying to be confident so that they get a lot of followers, in a sense, right? So you have to be careful of that. What I've learned in my trading career is, yes, to be confident, have conviction, but know where you're going to be wrong. My trading system, I'm much more confident in that than trying to make predictions. But again, younger traders, they love predictions. They want to know what is going to happen the next day. And they want someone to tell them, hey, this is probably going to happen tomorrow, right? Younger traders love that. But I could tell you that doesn't work, right? Because those who make that prediction, they make another prediction the very next day, right? And they change their tune. But I get it. They're drawn to that. All right, so I think some levels to watch here, right? So I think pretty constructive for the S&P. The Dow too looks like it barely had any movement today. I got long diamonds calls yesterday. I added to them a little bit on the dip today, but just a lot healthier looking in terms of not so much of a swing and so on and so forth. Let's talk a little bit about what the performance was. Again, the biggest range for the day was in the Qs. They rallied 1.4%. The S&P rallied 0.7%. Diamonds still did fine today. They finished green. They just did not have such a big move during the day. I mentioned bonds. They finished down. The VIX did finish down for the day. It got up to a high of 27 today. So a bit of a roller coaster. Solar, right? Came all the way back. Solar was down about 5% for the session, finished close to flat. Internet stocks, they were strong. Clean energy was down. I thought I saw it around down almost 10% for the day, but it finished only down 4%. Chinese internet names also came back. So this was a little bit more, finally, we've talked about too in the last few videos about the market is a kind of a push-pull mechanism, right? Rotation into value we've seen over the last week. However, as growth names get hit and they go down, they become more attractive. So today, we started to see really that buy the dip mentality come into some of the beaten up growth names, right? They had just sunk a little bit too much. Semis is something that I'm still watching too. I did, find a nice trade today in CRE. Because we've seen repeat call activity. So I followed some option activity today, and that one got rewarded for it pretty nicely today. And this trade should be, I bought some at 114.65. Where was this trade that I got into? Right around 3. So this was at 3 o'clock. This was later in the day that I got into. Oh, sorry, that's not right. Nope, 2 o'clock. Yeah, right around the 2 o'clock hour. All right. And yeah, so a couple other things that I traded too. I've got a list of names that I like to buy on dips, right? One of which is CrowdStrike. And CrowdStrike was down about 10%. So I took my profits pretty early in this because I didn't know what kind of day that we were going to get. I think CrowdStrike finished pretty nicely here, still down 3%. But one of the things that was concerning me during the day was breadth was not strong, and it got stronger through the session. Right, so a couple of things that I look for confirmation, right? Again, other than making predictions, I'm looking for confirmation, right? So I'm looking for market breadth, right, to confirm, right? And we did see this, right? This is where we opened, and we gradually got a little bit better, and then it finally we had some breadth flip to the upside, right? So you could see this, but we kind of stalled midday, right? We got to a high point at 11 o'clock or bounce point, and then we started really retracing the move. And breadth was still kind of ugly, although it was improving there a little bit. The other thing that I look at is the VIX, right? I wanted to see the VIX. Here's where we got to this point, bounce point in the market, and the VIX didn't break trend. So that didn't basically materialize until the afternoon. Right, which again is a good thing to see that kind of fall back under the 200 period moving average, which is kind of a trend line. So I think a couple baby steps that there was some things that I liked today, but still we'll trade disciplined, and we'll see if this kind of marks the low after multiple days of decline for the S&P and for the Qs. So that's it. And then try to take shots at some of the right places. Apps was another name that I like to revisit really strong earnings names. This name coming all the way back down and filling the gap on earnings after really strong earnings. Right, this thing was set up nicely for me today. Good risk to reward, and I knew $65 would be where I would have a stop. Right, I got in at 72, and then I took 3 targets in this one. So I took my last target at $80. Also, Zillow was one that I talked about, I think, in yesterday's video. It filled the earnings gap all the way back down from the breakout level. So I took a position in, it was basically a lot of starter positions when things are moving this quickly, right? So I actually rolled this from, made some quick money on it, April 170 calls, and I rolled them out to the April 175 calls. Diamonds, like I said, worked for me, but Snap. Kind of interesting. I tried Snap earlier too, because Snap is one of those names too that I like, and I actually took this one off, so I missed this move. That's okay. A lot of traders in the room made money on it, but kind of interesting. What I was going to say was that some names that we saw option activity in kind of really help on days like this, in my opinion. We saw repeat call activity this morning in Snap, also in Pinterest, right? These are two of the better performers in the momentum space. Pinterest came all the way back and up 4.4%. I mean, that's a huge monster move, right? So those were a couple names that we saw option activity in. We also saw calls in DraftKings, which they're speculating that Texas is going to approve that. So a couple strong names in there. There's one other name too that saw option activity. Oh, that was CRE. right? So I kind of stick to that, right? As long as it meets my system and my criteria. If I see repeat call activity on a big dip day, I will use option activity a little bit more than I normally use, because it's just a really good gauge of where institutions want to kind of come in and buy the dip. All right, so that's it for today. The other thing, just as a point from yesterday, when the market is moving like this and when the market gives you some warning signals, getting out of some positions is paramount, right? When you think that the market is starting to move to the downside. I unwound a decent amount of positions yesterday in the growth area, right? And I just thought that we had the possibility to really go lower, and that helped me a lot today. Now, when we opened, I started down on the day, no doubt about it, and even some small positions that I had on hurt me pretty decently this morning. But I really wasn't in a sense of being in a bad place because I took off some positions, like Teladoc, right? Finished down 4.7%, but I took this thing off yesterday, right? Because it got back to my original cost basis, right? So making some trades like this, right? I know that there's this saying on Twitter that's, the diamond hands. That could really get you into some trouble, right? So, I took this thing off even low, at 277, right? But the way that things moved this morning, right, I would have been way underwater if I had not made some difficult decisions yesterday and the day before that, right? So when volatility picks up and when we start to roll over, what really helps is to have smaller size positions, because especially there's a lot of names that were down close to 10% today. So smaller size positions and smaller quantity of positions. I've said this before too. It's one of my sayings that when we have a dip like this, I want to be on the offensive side of the field, right? I don't want to be playing defense. I don't want to be back on my 10-yard line saying, oh, geez, I have all these problems and all these positions that are way underwater. You can't react to what's in front of you when you've got all this damage control in a lot of positions. So again, something that I've learned and something that I continue to try to get better at, because again, nobody's perfect at this game. I hate to tell you, right? We're all trying to improve what we're doing. Having experience helps, but no one is error free, right? Everybody makes mistakes and so forth, but experience helps to kind of know that you've been in some bad or difficult areas before, and you do rely on experience to kind of help you get out of the situation a little bit. But not getting yourself into a bad spot to begin with certainly helps. All right, guys, that's it for today's video. Have a great night, and see you tomorrow.